Welcome back to my YouTube channel. So glad to have you here. Our first episode that we're airing here in 2025. You have been renting for the last 3 to 5 years, and you finally made that decision that 2025 is going to be your year to purchase your very first home. We're going to talk about several things that are really going to impact you specifically this year, but some of these things are going to impact you whenever you decide to buy. As you may have heard from some of your realtor friends on TikTok or Instagram that 2025 is a special year. The reality is your year is the special year, whether it's this year or next year. Just know that these things are going to impact you on your home purchase, and we want to make sure we prepare you. So take a little bit of time, feel free to take some notes, and of course share this stuff with anyone you know that's thinking about purchasing a home. The first thing we're going to talk about is inflation and the impact it has on mortgage rates as well as the home buying process. So inflation is more dollars chasing fewer goods. That's the definition of inflation. That means that the value of things or the price of things goes up. So how does inflation impact you as a home buyer in 2025? Well, inflation rates, again, have been slightly on the rise, and mortgage rates, unfortunately, are too. With a new election and Donald Trump in the office, there's additional fear of inflation because he generally charges the economy, as well as the tariffs that he's promised the world that he's going to impact. Those things will have impacts on inflation, will cause inflation to move up, and again, mortgage rates always follow that. So as mortgage rates move higher, currently we're in the low 7s for a 30-year fix with no points. If interest rates move up to 7.5 or 7 3/4, that means the same house is going to cost you more money, potentially $100 to $150 more per month if we move up just a half a point in interest rate. Obviously, that depends on the loan amount, but that's about what you could expect. So why do you want to move forward quicker? If we have inflation continuing to rise, naturally, the sooner you lock into a lower interest rate, albeit higher than you want, is still a better opportunity. Now, the next piece that we're going to talk about is the spring market. And this happens every single year as we turn the clock and turn the calendar and head into the next year. The last 4 years in a row, my team and I have noticed literally on January 2, all hell has broken loose and leads have started flying in the door. Applications, people deciding, okay, the holidays are over and now it's time to go ahead and buy this house. And so we get really busy for potential home buyers that are ready to go out there and look at homes. Interestingly enough, this year, because interest rates have been on the rise, we didn't see that initial kick on January 2. It really started about 4 or 5 days ago, so really the second week in January, but we have seen a big increase in the number of leads and applications and pre-approvals, which means all these people that we're pre-approving could be fighting for some of the same properties in the very near future as these properties hit the market. So how does the spring market impact you? I'll tell you, a lot of the buyers we're working with right now in many cases are barely qualified for the price of the home that they want. The challenge here is that if interest rates move up, that's going to cause an additional issue to cause their qualification to come down and then potentially be priced out of the market. The other part is, if we see more and more home buyers come into the market this spring, like we have almost every spring for the last 5 to 6 years, if not all the way back to eternity, then you're going to have more competition. When you have more competition, that means you don't get to negotiate with the seller. The seller is really picking the best out of multiple bids, multiple offers, right? So then you have to then pay additionally over the list price versus maybe getting the seller to negotiate downward. So I think there's a window. I'm not sure how long it's going to last, but if you're thinking about purchasing a home, I would encourage you to get in the game sooner rather than later. Now, this is another really good important thing that I want to encourage you. If you think you're looking to buy a home, I don't care if it's in 6 weeks, in 6 months, or 6 years. If you think you're looking to purchase a home sometime in the future, this is the time to talk to a mortgage lender. I promise you, you do not want to wait until you find the house on a Saturday evening, reaching out to a loan officer. We work the weekend, so we're happy to help you. But you may not have time if you're in a multiple offer situation, especially if you have a complicated file. We've seen this over and over again the last few weekends where people all of a sudden are looking at a property and they decide they want to go ahead and make an offer, and then we've got to scramble on a Saturday or Sunday, again, which we're happy to do, but if you don't have all the documentation, there's a lot of risk and you may lose out on the house that you're looking for. Now, we're recording this video on January 14th. So if you purchase a home this weekend and get under contract, the typical time to turn over or get to closing is around 30 days. Now, we close loans very quickly, so if you need something done in 2 weeks, let us know. But most people take about 30 days to close. So that already puts us well into the middle of February. You may think that the spring market is a ways off, but typically it starts right as the new year starts. So please know you've got this window. We don't know how long it'll last. If you're considering buying, I would encourage you to get educated as much as you can as quickly as possible. Hey guys, I just wanted to take a second out of the content that we're shooting and sharing with you to ask you a favor. If you like what you're hearing, please be sure to like, subscribe, and if you've got any kind of questions about anything we're talking about or other topics that you'd like us to discuss, be sure to drop those in the comments. We'll be sure to respond to you and love to add another video that will help you in what you're looking for. Thanks so much again for taking the time to watch our video, and we really appreciate you sharing this with others. What are the hidden costs of purchasing a home? Now, this is a question we get all the time. There are not hidden closing costs necessarily, but when you purchase a home versus just being a renter, there are additional costs you need to consider. So the first thing and most obvious, right, is your down payment. This isn't so hidden, but it is very much a very important cost that you need to understand. So down payment might include if you're going to put 20% down or 3% down, or maybe you're getting a VA loan or a USDA loan, which allow for a 0% down payment or 100% financing. That's great, right? But your first cost is your down payment. Typically, not always, but typically the more down payment you have in many cases, certainly the lower the payment's going to be, but certainly your overall interest rate will be a little bit better as well, okay? Know that you got to rely on the lender you're talking to help make sure you understand this better. Other costs. Now, you have really two sets of closing costs. In fact, I'll say three sets of closing costs. You have closing costs, which are one-time fees that you are paying basically for services rendered to get you to the closing table. So those are things like an attorney fee. That's about $1,000. You're going to have typically a lender fee of some sort. We have a commitment and underwriting fee. It's $1,495. Then you're going to have title insurance. That's going to range based on your purchase price. You're going to have a termite report if you choose to get a pest inspection, which most people do. And then you're going to have things like recording fees. The typical closing cost portion is about $4,500 to $5,000, not counting any discount points. Now, discount points are typically a fee that you pay to get a lower interest rate. It's optional. Your lender should be giving you some advice on that based on your cash availability and your overall payment needs. So closing cost, $4,500 to $5,000, give or take, depending on your purchase price. Now, there are also things called prepaid items. Now, prepaids are prepaying reoccurring expenses. So that includes interest. Now, you're going to pay for interest from the day you close through the end of that month. You will skip a month before you actually have a monthly payment, so it's important to know that. But then you will have homeowner's insurance, so that's annually, right? But we're going to collect 1 full year at closing, and then a few months worth of reserves are going to go into an escrow account. An escrow account is a savings account to pay your insurance and taxes each year. And then we're going to collect roughly 6 months worth of taxes, make sure we have enough money in that account. So later on in the year, when the full year is due, we're going to be able to pay that bill from the escrow account. Now, important to note that the seller is also responsible for their taxes from the time, from January 1st through the day you close. Okay, so they're going to credit for that amount. So around that a number is about what you'll expect probably for prepaid items. Let's sell it for a $500,000 house, somewhere in the neighborhood of $4,000 to $5,000, depending on how much your taxes and insurance are. So that's roughly, $9,000 to $10,000 is what I would expect in total prepaids and closing costs for a $500,000 house. Now, what other costs are you going to have? inspections can be endless, right? So we always encourage a home inspection. They generally cost somewhere between $700 and $1,000, depending on the size of your house and the type of inspections you're getting. You're going to get a radon test. This is something that measures radon gas coming up from the home, from the dirt below your house. This can cause cancer for your family, so you want to make sure that you either don't have radon gas or that it's mitigated, which means it's basically just blowing it away into the air and it won't get trapped in your home. And then you can have, again, all kinds of inspections, like a termite report. You could have a survey, right? A survey is going to be plotting different, exactly where your lot is, so you know whether that fence is on your land or it's on somebody else's, or if you want to put a fence or a pool, you've got a good idea what exactly your property lines look like. On a smaller property, it's not quite as important, although it may be depending on what you're looking to do. On a larger property, it's real important to know exactly where those lines are. So those are other inspections. Again, you could get things like a roof inspection, an HVAC inspection. The inspections are endless. I would rely on your real estate agent to determine what other inspections you need, or your home inspector may rely, or certainly may suggest, certain inspections based on what the findings they find. So your hidden costs or your total costs are your down payment, your closing costs, your prepaid items, and your inspections. Now, of the other potential hidden costs are just things that you're gonna have as a homeowner that you didn't have as a tenant, right? So now you are responsible for the maintenance of the property. I highly recommend that you at least consider getting a warranty. If the market is softer, where you have the negotiating power with the seller, in many cases you can get the seller to pay for that. If the market is tighter, where you've got competition to purchase a home, then you're probably going to have to pay for that warranty on your own. But as a first-time home buyer, I highly suggest this because it can help you prevent a lot of hidden costs that come down after you've purchased the home. Now, anytime you move, of course, you're going to have other expenses like moving. You're going to have things like furniture. You may need new furniture. You may need, all things for your bathroom and your showers and all these different things that you're going to prepare for. So just know that you want to save several $1,000s for that when that time comes, okay? So these are the potential hidden costs in purchasing a home in 2025. Okay, so you've just watched the first 10 minutes or so of this video and you realize, oh my gosh, Michael, there's a whole lot of extra expenses I didn't think about. Now, maybe I just want to keep renting. So here's what's really important you need to understand. As a renter, the amount you pay each month, whether it's $1,500, $2,500, $3,500 a month, is going directly to your landlord. You have zero equity out of that payment. You have zero net worth that's growing for you. So you need to determine what that payment and budget needs to look like and then make the commitment to purchase a home, because the cost of living, the rising cost of living, is impacting you whether you're a renter or a homeowner. Now, I've talked about this on a lot of other videos in the past. The average homeowner has a net worth of several $100,000, somewhere between $300,000 and $400,000. The average renter has a net worth of less than $50,000. So it's important to know that buying a home, whether it's just for you or your current family or your future family, can really make an impact in your wealth and retirement strategies well down the road. So I encourage you certainly to make that step to purchase a home. Let's talk about the rising costs of living. So obviously you have all kinds of costs, but most importantly, when you're referring to a home, when you purchase a home, you're buying a home typically at the max price that it's going to be going forward, meaning you've locked in a price and then you've got a 30-year fixed interest rate, and that rate won't go up going forward. Now, your payment will go up slightly over time because you're going to have taxes that will increase. You're going to have homeowners insurance increase, which is what we're going to talk about here and further in a minute. But the important part is your interest rate won't go up any further with a 30-year fixed. However, when rates come down, that cost actually decreases, right? So if you continue to rent, your rent just goes up and up and up and up every single year. But at some point, whether it's a year, 2 years, or 5 years from now, you're going to be able to refinance and get your rate much lower, which is going to actually make purchasing even less expensive in the future when you buy now. So let's talk about the rising cost of living for rent. The average rent in certain markets, I just saw a report this morning, is like 7 to 8% increase per month. So here in Raleigh, it's actually a little bit softer, around 3 to 5%, versus in some other markets where that's 7 to 10. Now, I actually was at a meeting this morning where they were showing that in just Wake County alone, 51 people on average are moving to our county every single day. They're not building enough houses for that number of families. So important to understand, we're going to see continued home price increases because there's just going to be more people competing for fewer homes. I really want to make sure I make this very clear. When you rent, it's almost assured that each year your rent's going to go up. When you buy a home, your payment is locked in. So let's say you're ready to make an offer or at least go shopping for a home and you're in a hot market. Now, Raleigh is certainly known, whether you want to call it Raleigh, Durham, Chapel Hill, right? The whole triangle is known as one of the top markets in the country. I continue to hear this report after report after report. So while some other areas are certainly having some challenges, the Raleigh market overall is still continuing to be flourishing. So you go to make an offer and now you find out that there's multiple offers. So how do you compete in that market or in that environment? There's a couple different techniques that I have that I'm able to share with my clients. A little bit of history, right? I've been a mortgage loan officer here in the Raleigh market for over 20 years. Fortunately, I've been one of the top producers for almost all of that time. Now, because of that, I happen to know a lot of real estate agents, and fortunately, we have a very good reputation. So when we have gotten your pre-approval taken care of, which means we've reviewed all your income, all your assets, all your credit, we have no concerns or issues with making sure we can get you to the closing table very, very smoothly and quickly if need be, then when you make an offer, I'm going to pick up the phone personally and call that listing agent and have a conversation with that agent to make sure that they know you are solid as a rock. Now, for whatever reason, most lenders, certainly not lenders that are out of the market, but even most lenders in the market don't make that phone call. For me, it's just picking up the phone and calling a friend and tell them, hey, let's make this deal work. My client is great. Let's do this. And so it's really a great way to help you win in a really tough market. Now, what are other ways that you can help your offer compete against others? Naturally, the first is you have a higher price, right? So you increase the price of your home. That's not fun when it happens, but if you like the house enough, you may be encouraged to do so. That just costs you a little bit more money. A third way, and one of the best ways that you have to be able to compete in a tough environment, is to increase your due diligence. So to remind you, when you purchase a home in North Carolina, there's typically 2 checks you're writing if they accept your offer. The first is a due diligence check, which is a non-refundable deposit directly to the seller. Second is an earnest money check. That check typically goes to a trust account, usually the closing attorney's account, and that's refundable if you terminate the contract for any reason at all prior to a due diligence date. So one of the things, if you're pretty darn certain you're going to want this house, or you want this house and you want to make sure that you get this house, is that you can increase your due diligence amount as long as you have the cash available. It makes your offer more serious to the seller. So let's say you're offering $500,000. You don't know, you'll never know exactly where the other offer is, but let's say they're at 505. And so they're willing to spend another $5,000. But they're really worried about their due diligence because they haven't been educated enough. They don't know exactly what's going on. Maybe they're not certain about their financing situation. And so maybe they come in with $2,500 due diligence. Well, if you make your due diligence, maybe you already started with $2,500, you make yours $5,000, or even better yet, $10,000. In some cases, guys, in 2021, we saw this number go astronomical when people were kind of trying to compete, and they often won over higher priced bids because it basically guaranteed the closing for the seller. So one extra way to make sure that you win in an offer is to increase your due diligence. Now, this will not ensure it if your offer is way off the other offer, but it can certainly help you accomplish. And when you close, you get all the money, right? You get that credit at closing, so you haven't lost anything. You just have to understand the risk involved if you were to not close on the house for any reason, like the appraisal came in low. Now, by the way, we have strategies that we teach people on to make sure you understand how to manage that. Or if the inspection came in poor and the seller doesn't want to fix anything. So you're going to have to get a pretty good indication of what you feel like the property looks like before you make that higher due diligence amount, and listen to your buyer's agent. They're the most important person to understand and listen to when you're making your offer. They're guiding you on all that. We just have ways that we can help help make your offer stronger so that you win in a multiple offer situation and get into your first home in 2025. So you made it to the end of this video. Hopefully that means you are absolutely serious about accomplishing your goal of homeownership. I can assure you, as a lender, I am very serious about helping you accomplish that goal. I want to make sure we give you great advice. As a matter of fact, the mission statement here at the Martin Mortgage Group is to positively impact people's financial lives. We want to make sure we have a positive impact on yours and anyone else you know. If you wouldn't mind doing us a huge favor, be sure to subscribe if you haven't already. We'd certainly love for you to like this video, and then comments always are very much appreciated, and then naturally share this with anyone else you think may be looking to purchase a home here in 2025 or beyond. And guys, if you happen to be interested in real estate overall, I just dropped a new podcast. We have developed this and been working on this for several months. You can check it out. It's called Beyond the Closing Table here on YouTube. Would love to have you get a chance to watch that, learn a little bit more from other experts in the industry. So thanks so much for your time. We'll see you in the next one. Take care.